Good morning, everyone. This is Wall Street Beats. I'm David Maris, hosting today's show. And today, before we begin, we're all horrified by the stories coming out of California, and our thoughts and prayers are with all the people affected, as well as all the first responders and people caring for them. This is obviously a developing story and extremely sad. We're with several of our partners out there, but as well as just knowing a number of people, we're just all really praying for the safety and well-being of everybody out there. So, but today, stocks move on, markets move on. We're going to discuss a number of them with Bob Morris discussing EXE, Jeff Mackey discussing Abercrombie and Fitch, Kevin Baker discussing those and more. I'll talk a little bit about HIMS and HERS and some biotech stocks. But why don't we begin with Bob? Bob, it is really cold out here on the East Coast. Does that do anything to oil and gas stocks? What's going on, and what's going on with the EXE?
Yeah, so obviously it's helping oil and gas stocks for the moment because both oil and natural gas prices up. Natural gas in particular has been holding up here just because of the extreme cold weather. You're consuming a lot more gas. And what happens in one of the primary gas producing basins of the Marcellus is you get some well freeze offs. And so that production stops for the moment, and that just tightens things up a little bit more. And so we've got, the futures here for February, the near month contract on natural gas up again today at $3.60, which is, a pretty good price for the middle of winter. Not surprised that you're getting a little bit of a spike here with this extreme cold weather, which always happens. But, and at the same time, people burn fuel oil. There's still, you burn natural gas, and in the Northeast in particular, a lot of, in New York City apartments and then industrial buildings that burn heating oil. So that helps lift that crude oil prices at the same time. But what I put a note out on this morning when it talked about was that Expand Energy, which remember is the old Chesapeake Energy, which came out of bankruptcy last year, and Aethon Energy, which is a private company, presented on a panel at Goldman Sachs Energy Conference yesterday. And two things. One, I want to talk about the gas price, and then two, just my increased enthusiasm for Expand Energy. But what both companies basically indicated is that $3.50 on a long-term strip price is basically where companies look to begin to, bring their shut-in production back online, and, a little bit above that begin to grow natural gas production, which is in line with what we've written in several notes before that we said, look, the first half of this year, apart from any extreme weather-driven spikes, which we're experiencing now, the ceiling on natural gas is probably around $3.50. And so we're probably in that $3 to $3.50 range for the first half of the year. So that's sort of playing out as we expected. What's interesting too, though, is if you look at the 12-month strip, the 12-month strip is up here closer to $3.60, and that's really being lifted by next winter strip, which is November through March, is at $4.15. So when you look at the equities here, that's what's getting investors a little bit excited here. People have been waiting and watching the winter weather, which is the big wild card near term, but also wanting to own these names given the uptick in demand everyone expects beginning the latter part of next year, both from LNG export facilities coming online and from the AI power generation demand. This is really going to start to pick up in the second half of next year. So that combined with a momentary move in natural gas prices has provided a lift to some of these more gas-focused names. And as you know, we have a position in EQT, not a full position in Expand Energy. And, just listen to them presenting yesterday, just increased my enthusiasm for this name. I want to own a full position in this name. I don't own it yet, but, looking now toward the latter half of next year as we get into that increase in natural gas demand, this is a name I really like. I give very high marks to management, and they're doing all the right things here. They and EQT are the purest natural gas names in this sector. And the one thing I'd point out on EXE is that they pay a pretty decent dividend, 2.3% yield here, which is the highest dividend among the gas-focused names. At the same time, what people may be overlooking is that the current strip, they're going to generate significant excess free cash flow. And what they've said is, first of all, what they've budgeted and what people are modeling is a maintenance program, basically keeping production flat. But they said with any excess cash, they're first going to pay down a little bit of debt, and then they'll do one of either of three things. They'll either begin to increase production, or they'll buy back stock, of which they've got $1 billion authorization for, or they'll pay a special dividend. And I think their first option is going to be to buy back stock here. So we'll keep an eye on that. But I think the one thing that people may overlook is this significant excess cash they'll generate where the current strip is for natural gas. So, EQT, EXE, I'm looking to add to my positions here. Hopefully I'm not being too cute trying to get them cheaper here with
yeah. So that's what I wanted to ask you about. Like, are you being with 1 month in of a 7% return, a 5-day return of I think 4%, if my chart is right? Are you being too cute, or what are you waiting for that you'll pull the trigger and say, you know what, I'm going to make this a full position? Or are you waiting for some dislocation? Or are you waiting for the spring when people aren't worried about 20-degree weather in New York?
I'm basically waiting for the spring, to be honest with you. I mean, you look at the March futures contract, it's at $3. So the market's saying, look, we're, February contract, $3.60, March, spring, we're back down to $3. And you always see this sort of when you get this spike with an extreme cold snap in the winter, things jump up here. I may be being too cute. The market may be looking beyond that and saying, yeah, it may come down in the spring, but look, next winter, we're over $4 for next winter. So yeah, that's the thing that I worry about, that I'm trying to be too cute and trying to get these cheaper here and adding to my positions. And so, I'm going to be patient. I'm going to keep an eye on it. I think we're probably, at the highs for the winter, unless we get another extreme cold snap. And I think what I'm waiting for here is to see the natural gas price settle back down after this extreme spike on what is very cold weather and some well freeze offs. And what the futures market is telling us that it's going to settle back down here into March and into the spring. But I definitely want to own more of both of these.
One quick question on this. If you expect that the spot price is going to drop 20%, or if the market's telling you that it's going to drop about 20%, would you expect to see a commensurate drop in the stock? Or is it no, for a 20% drop, you might see a 10% drop? In other words, what's your magic number? Are you looking at $90? Are you looking at $80, $70, where you say, you know what, this is a really good bargain for the next couple of years?
Yeah. You're not going to see a commensurate drop in the stocks. And, gas comes in 20%, stocks aren't dropping 20%. But expand, I'd love to get it back closer to 85.90. That's probably my best shot. 85.90, I'm backing up to truck. This thing dips back.
Why that specific level, Bob? That's at a very specific level.
I'm sorry?
85.90 is a very specific level. Why that number? Please.
Just looking at where it was pulling back prior to this jump up in the natural gas price here. If I go back, I'm just looking at my chart here, and you can pull up the chart and sort of point out what you see there.
I want to talk about it a little bit more too, but yes, I get the gap.
I'm looking at a support level in here, close at around 87. That's sort of where it was back in October before we went into the winter, before we got this, cold winter induced move up at the natural gas price. That's sort of where I sort of see the support level down here between 85, 90. What I was going to say is, as I look at that, if we get back down to 95, I'm going to start adding at 95, but, definitely back up to.
Yeah. And also you'd have, what would that yield be? It'd probably be like 4% at that point or something, especially if you're.
Yeah. Then you're getting back up above 3%, which is a nice yield for energy stock. I'm sorry, Banks, you saw something on the chart here too.
Well, I put this for you and for members in our live chat. The only caveat, I like this a lot, and the only the up volume isn't very convincing at this point in time. So you don't have a lot of new institutional buy orders coming in just yet. So if I start seeing 150% of average normal volume days and it starts creeping up, I get interested. Here's the weekly, and we are $5 away from all-time highs. That's when everybody makes money and everybody has fun. So I would look down here, okay, to see this volume pick up. And then, I think you're not being too cute right now. If you want to pick it up at 85.90, that's great. But if this volume picks up, start getting a little bit more greedy, and you want to be full at 180, 108.50. And that's how I would play this.
Yeah.
Okay. Well, let's leave it there. It's super cold, and maybe we'll buy some gas stocks. Unless you have something else on it, Bob.
Yeah, I just don't want to chase it here. And I know we're at the extreme of the cold weather we're going to see in the Northeast. So I'm just betting here that as this cold weather dissipates and we get back to normal and get into the spring, that I get a better shot, hopefully get a better shot to buy or add to my position here.
And the volume suggests that's the way to go, in my view.
All right. Well, perfect. So, Jeff, you have Abercrombie and Fitch. I don't know if Chinese food makes you sick. I don't know if you know Billy Shakespeare wrote a whole bunch of sonnets, but your Abercrombie and Fitch always takes me back to
the LFO song. Oh, those are the days, man. I mean, my hair would flow in the wind as I was driving my Miata, I guess it would have been. It was a magical time. A magical time. Well, we're going to revisit those magical times at an ICR. I tell you, who likes the cold weather are good retailers. Good retailers love this crap right now, especially this time of year, because they're blowing out all their winter inventory. They're trying to get ready for spring. Abercrombie, frankly, doesn't need the help. We've got a conference called ICR coming up next week to put this all into context. About 160 of some of it's a full range. It's from Stitch Fix to Macy's to everything in between. Everyone goes there to report, and they have to disclose kind of how their quarter's going. This is typically a time when you get a lot of retailers, including Abercrombie, Lululemon last year, both right ahead of this conference. They updated their forecasts and they guided higher. Abercrombie's about to guide higher. That's not going to be a huge shock. I think they won Christmas. They talked to us in November and they said things were going great at the time. And they're not unlike any other mall store at this point in the mall cycle world. They need some traffic. Traffic picked up for even the lesser chains in December, and they think that we're going to hear that from Abercrombie. They're going to guide higher for the fourth consecutive time. That stock's been marking time basically since last March, when it just kind of needed a breather, and we've been pacing ever since. Now that kind of sets it up as a coiled spring. This only reconciles itself one way. Abercrombie was a 10-bagger over 5 years. So that's either the Christmas tree of death and we're about to just go straight back down the pit, or it's going to consolidate after a little bit of a pullback. I think we have the latter here. I love the tailwind of earnings just going higher and higher. I was looking at what they guided to last year for when they came out with their original guidance for this year. They're going to crush those numbers. They're going to crush operating income by 40% from what they said. Margins are 15, 20% higher than they suggest. I mean, this is a company doing everything right. That creates upward pressure on the stock. Now, Bakes is going to tell you, and I'm not even going to fight him on it, it's a base. You know what? When the base ends, whenever the base wants to end, that's when the base ends, and not one damn second before. So there's just less a trading call than a kind of beginning of the year. You got to decide which dogs you're going to stick with and which ones you're going to kind of leave out by the curb. And Abercrombie's one that I'm picking up here, add to it ahead of what I expect to be a warning or a guide higher in the next couple of days.
All right. And if they came in negative and obviously it dropped, what's the read through to other companies, or are there any other stocks where you say, look, a good Abercrombie print is bad for others, or it's also good for others? Or is ICR? I was just going to ask, is ICR?
If Abercrombie misses, ICR is going to be a mixed bag. It's Christmas is pretty good. It was kind of what I expected anyway, but it's and no one's more of a Christmas enthusiast than I am. It was the best Christmas ever by about 1%, which is that's kind of how these things roll these days. Abercrombie is the very best operator right now, David. You don't see retailers, and especially in specialty, that have multiple divisions that are all kind of just crushing. And the one difference that Abercrombie had this year that they're not getting credit for is that the Hollister division, which is about half of their revenues, is suddenly outperforming Abercrombie. And it's not because Abercrombie fell off that much. It's because Hollister's posting freaking 20% comps in some cases. It's kind of bonkers. This is a company doing so well that honestly, if they guide lower and they miss, that's the healthiest guy coming down with a cough. It's time for me to check into the ICU just as a preemptive healthcare technology. I mean, if these guys miss, it's going to be a real problem, but they're not going to. There's some wild cards out there that are going to be. We hear from Signet Jewelers. Our little friend Catherine Furlock used to love to bag on them. I don't expect anything good out of them. We hear from Macy's. Last time we heard from Macy's, they were telling us how some kid in shipping apparently hit $150 million of expenses over the course of 4 years, which just doesn't bespeak a company that particularly has its shit together. So it's hardly going to be a parade of excellence, but it'll be good enough, for my purposes, it's terrific because, you got winners and losers. That's a stock picker's market, and, all hail what's good in the world.
Yeah. So one question about bird flu, because one of our other colleagues had asked about it, and there's only been one case, so not to panic anybody, but if another few cases pop up, what happened obviously during the pandemic, everybody got hurt, especially retailers, but is there a way to think about either online versus in-person retail, or would all retailers just sell off if we had a few more bird flu cases?
Now, this is going to sound insensitive, and I don't want it to, because I'm a humanist. I'm a man who cares. If we came down with a nice big pandemic of bird flu and started locking people down again, I would buy the living shit out of an entire basket of good mall stocks that can deliver online. And I would just greedily sock those things up, maybe go on CNBC and say, hell is coming. And as I whimpered and said that they were all shorts, well, I bought every single one of them up to the hilt. I'm long Stitch Fix right now, which is one of my sketchier, kind of dicier plays, but man, the best thing that could possibly happen to them is that if we had some sort of bird flu outbreak. The consumer's fine. The consumer is 70% of GDP. And the first thing that this country does in case there's any type of shutdown is they save the consumers. Even if they bail out the banks, it's only so that the banks don't repossess everyone's houses. So I think the consumer proved, if anything, since the pandemic, a few things have happened in retail. One, they're not all getting stuff from China anymore. Any retailer worth its salt is diversified where they're getting their goods. And two, they've shored up their online and their ability to ship and profitably deliver goods using non-store means. Beyond that, it's when I'm looking at a specialty group, I'm going to see at least 30% of their revenue coming in from online. And I want that number to be kind of flexible, a certain agnosticism towards whether or not people come in the store, they buy online, they buy from the app. A good chain right now doesn't give a shit. A good chain right now just says, you know what, a sale is a sale. And the truth is, as we've seen from Aritzia, who is another favorite of mine from Canada, they always talk, they're in a growth phase right now, which is the reason I bring them up in both online and in terms of their store locations. They love to have the two together. They absolutely love to saturate bomb and make sure that their app and their ability to kind of deliver and distribute goods is in line every place they open a new store, because the two work together. It's additive. It's not just the case anymore that online steals from the stores. So, a long answer to the fact that a pandemic's not necessarily bad for the retailers anymore, because they've learned a lot.
Okay, perfect. So maybe Kevin, you could tell us, what do you see in the chart here? Is Jeff right that hey, it's a base, and is it good news? Is it bad news? What do you see
on Abercrombie, right?
Yeah.
Yeah.
Okay. Yeah. And we talked about this offline, and as Jeff points out, and I concur, when you run from 12 to 196, you deserve to take a rest. And this looks like a rest to me on the weekly chart here. This is 196. This is 121. And that's a staircase. That's a base. Now, my nitpicking side of me is I don't like having a close below the 200-day. I don't like the 50-day coming down, but you're not seeing an explosion in down volume. This 5 million day didn't do a lot of price damage, and so that suggests resilience. So I'm always looking at the up versus down volume. This looks okay. And bottom line is, if I see a print above 164, especially on an earnings call that Jeff smiles upon, then you're off to the races, because this 167 level and 173 level probably get taken out in short order. And then you threaten the all-time highs here at 196. So I don't like this action over here, but it's more cautionary than condemning, and you get a close above 164, and I think you're off to the races again.
All right, perfect. Jeff, anything left to add on Abercrombie or Kevin's comments on the chart?
No, I've got that LFO song in my head now, David, and so I'll probably have to be into that later.
What's so funny about that is I actually listened to that song about a week ago, and I think I am now the largest listener to LFO in the last 2 years. So
I've got on a loop with Mbop is also another song on there. I'm a double header.
when you have a minute, read up the story about the band. It's a tragic, tragic story. Essentially, everyone has passed away from the band other than one. So it's and even new members they brought in passed away. It's a horrible, horrible story.
Good Lord, David, let me enjoy the moment, man. Jeez.
Yeah, exactly. The bearer of bad news. Well,
David, are you okay? You keep bringing up bird flu and band member deaths. I mean, are you all right?
Exactly. I feel, just the specter of darkness.
That was a dark ass segue, man. I'm glad I could turn on that. That was great.
Well, we're gonna ditch Jeff now and go to Kevin. Kevin, do you have anything else for us?
Yeah, I'm over here and looking for famine and pestilence. No, and NVIDIA isn't famine and pestilence. I bring this up first, and I struggle to decide what to talk about. But NVIDIA is so top of mind, and CNBC was kind of breathless that Jensen Huang couldn't dazzle them at CES. The leather jacket doesn't work anymore. It didn't hit a new all-time high and keep going, and that's the same kind of thing that I see here. You go from, just over the last year, 50 to 150. You deserve to take a break. And this, frankly, looks a little similar to the A&F chart we just talked about. But when you do see a new high and then a reversal while Jensen's speaking and close at the low, it is concerning. But that's all it is. It's cautionary. It's not condemning. And there's been very little technical damage done. And now it's just time to wait to see how this resolves itself. One day does not make a trend. I guess all the bulls, would love to have it rejoice and have every time he steps to the podium have the stock rip. But, it does seem like it's stalling out. I've been talking about Microsoft for a while, the bloom coming off the open AI rose. So it's cautionary. But, to those who want to say, well, I told you it's going to be Cisco in May 2000, it isn't. It isn't even close. But it's concerning technical damage that I have to acknowledge. Any questions, guys?
Nope. That's pretty specific. So good for that.
All right. Here's Dell. Dell does not look good. And so this is sort of, you have the Keith Jackson, granddaddy of them all, AI poster child, mixing my metaphors. And then you have the AI adjacent. This is Dell. And Dell is kicking off the first 2/3 of my sell discipline. And for members, I got to tell you, this is worth the price of admission. Every other service talks about how to buy stocks and then they go radio silent. We do not. I tell you how to sell stocks. I've studied this because I didn't want to have my brains blown out a second time. I've gone back and looked at all the stocks that roll over, what they look like, how to avoid them. And they kind of look like this. All right. They go through the 200-day first. They close below there. Then the 50-day comes down through the 200. And then they gap down here, creating concerns on this big volume. And now you see the 200-day just starting. I'm literally watching it day by day to see how this rolls over. So I just bring this up that the AI, I hate plays, but the AI investments are starting to winnow and roll over. And if you're long Dell, I would be out of 2/3 of Dell if I owned it at a price that this suggests around 117. Here we are at 118. And my suspicion is the next time I come and talk about this, we're going to be lower.
All
right. Now, for something completely different, for my Monty Python fans and my David Maris fans, $5.3 billion biotech that I hope I help members and David to keep on their radar screen, Bridge Bio. And we haven't talked about this, so I might be ambushing you a little bit. We talked about this here when it spiked up to 30.51. It had data that impressed people, but maybe not enough. Maybe people thought there was a secondary coming. I don't know if the secondary came and went, but please keep this on your screen. And I want you to keep an eye on this red line that I'm drawing here. This is 30.51, and maybe put in an alert somewhere. If that goes above that, you're going to see a big trend change. Take a look at the longer picture. Okay. You can go up, to the 60 plus level if this starts to turn around and you have positive data in your hand. So I just asked David and others if they're involved here tangentially or currently to stay on top of BBIO, BridgeBio, because it just catches my eye, especially when it acts well on a day like yesterday when so many things were acting lousy. I think positive things are happening in BridgeBio, and it's confirmed to me by these upticks in volume. Now, this is the data day, but it's also you're seeing I always look to have these blue lines exceed the pink lines, up volume exceeding down volume. And that looks like a pretty nice base. 3051 is the first level, 3206, and then you head into 41 plus.
So I do have a little bit of background. I'm not involved at all. There's a Twitter gang that is doing a contest for top performing biotech for 2025, and there are 100 of them. So there are 100 of the members that have come together, and they all picked very low price stocks because they're just all trying to win. I don't know if there's a cash prize or what it was, but they all put in mostly all, but a good handful put in BridgeBio, and my worry about BridgeBio is with the CEO. So about a year ago, the couple days before they were supposed to have a data readout, he posted on LinkedIn something about a quote from Homer. And it's essentially a quote that said, look, coming home, I've succeeded in my mission. I've exceeded it. I've come home. And it's a success type story, at least the line that he put in. And the stock gapped higher, and it went into the weekend. And then, of course, I think it was the weekend, but they had the positive data. And he came out and explained that no, it wasn't insider, tipping. It was, he wanted to make a note to his family about how perseverance is important, and he wanted to post it on LinkedIn so he remembered to talk to them about it. And obviously we all would put a post-it on a refrigerator or something like, hey, talk to children about how it is. But to me, it was very clear. He was trying to, and it's human nature. If you have good news about something that's going to help, bring the stock higher, that's why there are so many rules around it, because everyone knows, the SEC knows it's human nature to want to tell people this. To me, it was clearly a violation. Obviously, he was never charged with anything like that. And so maybe it wasn't as clear to others, or maybe it wasn't. Maybe it was just an innocent mistake. But I secretly hope that for patients, I hope that the data is good and everything works out for them. But I really do not like when management teams are so cute that they're trying to tip off friends or appear to be to doing that. Even the slight appearance of that is wrong in my book. But there's a news article out about it, which is pretty funny. I'll send it around. But so that's not really a fundamental view. It's just kind of a fundamental view on the guy who's running it. So speaking of questionable management, so HIMS and HERS management team, they're not beyond that either. They one time put out something in support of Palestinian protesters taking over university, buildings. He later recanted that, so I give him a pass on it's still a net negative, so I shouldn't say I give him a pass. I remember it. I'm mentioning it now. Obviously, it still bothered me, but I've owned HIMS and HERS and been trading around in it. Anyone who's a subscriber knows we've talked a lot about this. And, but I do want to talk about what's going on with this the next little bit. So I still think that it's worth $30 a share based on the base business alone. So at this price, that's a pretty good price. But the next few catalysts might be negative. So the FDA has to decide on whether or not semaglutide is still a shortage. If people don't know, HIMS and HERS just came out a few months ago with the GLP-1s. They're starting to sell those, which are the low cost or compounded versions, much, much cheaper than the currently products sold by Novo and Lilly. And they could do that because the products were on shortage, and for some other reasons as well, because they're personalizing the approach for every patient and so on. But as they remove them from the shortage list, there's a concern that they'll no longer be able to sell these. I don't know if that's entirely true, because they could personalize each one of them, but there's probably lawsuits in their future for this. So, but the next thing is, will the FDA remove it from the shortage list? I think that they will. That could be a negative, another couple dollars in the stock maybe. Right now, the short interest is about 20%. We'll get an update on Friday of what that is, what it currently is. But at the last print, it was 19.7%, I think. So it's a big short interest. Now, you could have semaglutide also listed as a difficult to compound, which then limits further compounding. I think that HIMS and HERS could get around that. So I'm not worried, but headline risk, it's there. And then eventually, after these things come out, Lilly and Novo have hinted that they're going to seek legal remedies, and we'll see what that happens. Now, I think if I were HIMS and HERS, I've had a great quarter. Web traffic is up a lot. I imagine with the GLP-1s, they're going to blow out numbers. I think that next year's number, if they give guidance, could be $1.50 or so. If I were they, I'd really consider pre-announcing, jam the shorts. Then when the negative news happens, you're starting from at least a higher base. But with the JP Morgan conference happening next week, I don't believe they're there, but they could just do that anyway. But we'll see. I love companies that have big short interests, that the business is growing tremendously, that have negative catalysts, because it's going to give me a chance to buy it cheaper if the negative catalysts have come in. But I still own it. I own less than I did a month or two ago, but I still want to play through this because I think that with or without GLP-1s, it's still going to be a fast growing company. But with that, Kevin, I cut you off. I didn't know if you had any other stocks that you were going to talk about.
Well, no other stocks, but I've got a couple things. Number one, I encourage people to become members. Go to the live chat. I'm going to put my new buy of a foreign ETF that I think is interesting. I'm going to show Charlie Peabody's bank stock that's acting, much better than I ever thought it would, and one of Ben Bry's high flyers. And so the private chat has has all the sausage making of what we do here. But I also wanted to ask, what makes you kick over a new hornet's nest versus HIMS? What makes you finally say, I'm sick of talking about meetings and shortages and legal action, and go find something else to do?
What do you mean? Are you saying, hey, listen, give me another name?
Take the HIMS profit and run. When is the controversy not worth it?
Well, so that's what I did at 30. So I really think that under 20 is a great buying opportunity. I think over 30 is when you sell it. And I think that's so we're kind of in the middle here, a little bit on the lower end. That's why I kind of have a small position. But so if something were to happen to their base business, and I do think that comps next year are going to get tougher. So they've been growing really fast, but that's the nature of this. The thing that doesn't concern me about the comps getting tougher is that they started generating cash. I think it's 7 out of the last 8 quarters or 8 out of the last 9 quarters they've generated cash, and that's been increasing. So yeah, you have slower growth, but you're becoming much more profitable. Margins have been improving. So I do like this longer term. Now, there's a whole nother thesis that's going on here that I should talk about. This is the founder here is like a friend of Peter Thiel, and they just donated $1 million to the Trump organization. I think that telemedicine is a great strategy for healthcare if it's done right, for lower income, for everyone actually, but for lower income as well as rural areas. And I think that to me, it's a bigger thesis of where are we going in healthcare, and barring nationalized medicine, finding very low cost options is one here. So what would have to happen? It would have to be, a problem with their base business. And I think everyone thinks it's all ED medicine, but it's anxiety medicines. It's, women's health care. It's, a third of their business, maybe a quarter of their business is women's health care. So I'd have to see something with their base business that causes that profitability to drop significantly. Because again, I think that's generating $1 worth of earnings right now. Now, with that, I should mention that on HIMS and HERS, next Wednesday, we have the moderator and founder of HIMS House. HIMS House is an online community just dedicated to HIMS and HERS. And believe it or not, the collective group of them own about 1% of the company, and they have about 1,000 people, more than 1,000 on their Discord, but 1,000 subscribers. And they put out really good, timely information about the stock. So just imagine a crowdsourcing 1,000 people trying to keep up to date on one stock. It's actually a pretty fascinating business case study, but we're just going to talk to them about what they're seeing and what their folks are saying. They're generally bullish. So, I mean, my comments today are a little bit more cold water of like, let's be honest here. The next couple catalysts might be negative, but next Wednesday we'll be hosting them to talk about
a great conference. I mean, the HIMS and HERS guys must just throw a party. That'd be like Caligula out there, be an incredible opportunity to kind of be great enthusiasts.
It's funny because they talked about how the CEO followed them for a day or two, and like they noticed it, and then once they all talked about it, he unfollowed them. So
yeah, he may put him on his burner phone is what he did, but that's fine. Yeah. No judgments. Exactly. It's a good company. I think they solve a lot of problems. I mean, are you looking at it just from a valuation basis? And in terms of the lawsuits, isn't that just a freight train that the entire world can see coming? I mean, I agree with you in part, but I look at it from just kind of a pure cynic consumer perspective. And I think they're selling products that are going to have a lot of appeal, and people don't need to go to their doctor for their erection, hair, and thinness drugs necessarily. I mean, safer drugs that are clogging up the medical system, that is a good business to me from a consumer end and just from a society. So no judgments here, but like it's at what point does that threat just kind of come true? And it turns out it's not enough to kill the company. They simply move on to other drugs. There's plenty of drugs that fit the bill.
And by the way, it could turn out to be a huge positive. So I mean, again, this is really in the weeds, but for example, Novo Nordisk I think it was Novo, maybe it was Lilly, one of the two, signed a deal with Roe and to offer their products on their platform. But one of the weight loss drugs, an earlier version, liraglutide, went generic. And so now they can just drop down to that one, offer that. They could make a deal with one of these, especially since Novo's drug has had a little bit of a setback with the data versus Lilly's drug. Lilly has better data.
Yeah.
And so there are lots of different ways to skin this. I also think they're going to start to build it out with other medicines. So I look long term. I feel good about it. I hate the near term, but you're right. The cost of doing business is getting through this. The FDA will not allow a couple 100,000 people to all of a sudden lose access to their medicine. I mean, it's just if all of a sudden, so a deal is going to be made one way or another, but that's a lot on HIMS and HERS. But does anyone have anything else?
The last thing I'd mention, when I was talking about natural gas and crude oil prices, well, freeze-offs in the Northeast, which impacts natural gas more than oil. But, the latest headline I saw this morning was that, they're bracing for cold weather in Texas. And probably the worst storm since 2010. In the Northeast, they sort of anticipate what could happen to wells and well freeze-offs and try to prepare for that. In Texas, not so much. And you have more oil production and natural gas, but you have more oil production in Texas than in the Northeast. So that could become a factor on the oil prices for this storm now that's supposed to come this week down in Texas, Arkansas, Louisiana, results in some well freeze-offs in Texas, which they typically don't prepare for. And that's could be a bullish factor for oil too.
So tell me, what's a well freeze-off? What's a well freeze-off? Is it exactly what it sounds like? Like, hey, the well freezes, we can't pump oil?
Yeah, most of these wells are remotely controlled, and they got pneumatic or electronic controls on them, and it gets too cold and they freeze up. And then, if the controls don't work, then the well doesn't flow.
All right. And no one thought about putting a heater around them or something like that?
Well, they do, but still, sometimes it's not enough. You get this wind, and not all these have little sheds or, shelters around them, and they've got a pumper that tends to drive out between wells all the time during the year, but you can't get to all of them during the winter time to check them and make sure everything's running and turned on. And so it happens. It's just not as well. They don't anticipate it as much in Texas as they do we
got a pretty good national infrastructure backlog. We'll get around to fixing those at some point.
All righty.
Just something to keep an eye on. It always happens.
All right. Well, let's for your stocks, let's hope for cold weather in Texas. Let's hope for rain in California. Let's hope not for a bird flu, but for Abercrombie, but we'll hope for the ICR. And with that, that's the end of Wall Street Beats for today. Have a great day, everybody. Talk to you soon.
Thanks, Hank. I got to jump. Appreciate it.
Thanks, Banks.
Thank you, Jen.